This is for those, we had Dana Telsey in, and she literally grew up, folks, I'm not kidding, at the corner of 57th Street and 5th Avenue. Her grandfather had a nodding acquaintance with a shop called Bergdorf Goodman. Richard Saperstein's not much different. He is the fabric of Wall Street, going back to Myron Picot and Oppenheimer, and then at Bear Stearns, he survived a really ugly day where, was it $1 the building was sold for $10? I can't remember. And thrives with Treasury Partners as a financial advisor. Is everybody moving to Florida? Defend New York City.
Everybody is moving to Florida because of the aging population, and they want the warm weather. I think there's some exodus out of New York, but I'm not sure it's being driven by politics.
I'm going to cut to the chase. There's all these fancy people talking to the mayor. He ought to be talking to Richard Saperstein. I mean, with your charity and what you've done, the decades that you've done this, what would you say to the mayor, frankly to Governor Hochul as well, about this Manhattan?
I think it's very clear there's been an exodus out of certain high-tax states where policies are not highly effective to attract capital, build businesses. You're seeing it move to Texas and Florida. There's great budget deficits that are occurring in these high-tax states. And that leads us to some direction for municipal bond purchases, where you can find credits that are well backstopped by fiscal integrity, greater ability to pay claims out. So,
Richard, you mentioned munis, and, it brings me back to a day, I cut my teeth in Lehman's private client services program, coming out of Vanderbilt. And I think, sorry, that was NYU Business School, just like yourself. And I remember this product called Savers, Select Auction Variable Rate Securities. They were like short-dated municipals, right? Do you remember that stuff that blew up the high?
Every 28 days.
Right, exactly.
That worked until it didn't.
Right, exactly.
Okay.
So, you advise, countless sophisticated individuals and institutions globally. What are like the hot products that guys are gravitating to? Earlier on the show, we were talking about these tax harvesting funds and these. What are people gravitating to? What are you seeing?
For us, what's old is new. And we went through a period of 15 years of zero interest rate environment. And now all of a sudden we can get 4.5% tax-free on high-grade long-term municipal bonds with a 10-year call. So they have a 9-year average life. And there's something for everybody in that type of an investment. There are retired clients. There are soon-to-be retired clients. And they want to put money into something that's going to generate a reasonable rate of return. It's tax-free. It avoids the Obama healthcare tax. So at 4.5% tax-free, that's equivalent to what 9% pre-tax. And if we take that one step further, during that zero interest rate environment of 15 years, there was a huge buildup of private equity, private credit, private investments to achieve higher returns. But in the end, did they really exceed 9%? And if you risk adjust them, if you illiquidity premium adjust them, are you better off in those than in muni bonds? So we've been marching out of a lot of illiquids and adding munis for clients looking for safer portions of their portfolio.
Richard, what are your thoughts on gold? Is there a place for gold in investor portfolios?
There probably is. We're just not in the metals.
Okay,
world.
No. So you do not view gold as a store of value. It's just basically a big shiny brick.
He's like Dana Telsey. He's at the corner of 57th and 5th Avenue.
Yeah.
We're going to come back. Richard Saperstein, we got too much to talk about. And Nestor sits down next to me from Charles Schwab, and we're talking Liz Ann and all that. And Schwab does a bombshell like 3 days ago. Let me paraphrase their 6-paragraph press release. Okay. We need to find more Richard Sapersteins. The bottom line is I'm being told AI financial advisors are going to go away, except the adults in the room, like Fidelity and Schwab, are going, we need more Richard Sapersteins. What do you say to young kids? Their heads are getting spun around by this debate.
Oh, it's an outstanding opportunity to get into our industry, the wealth management, giving advice business, because you cannot create proper asset allocation, manage risk, adjust for client exact requirements by having it run by a model. And the mass affluent market will be served by models, but wealthy people will need someone to speak to. So we have a great opportunity going forward.
So what I really want to know is, what are your thoughts on silver? No, I'm just kidding. No, Richard, I mean, so look, broadly speaking, I mean, coming off the war with Iran, I mean, what are the cyclical forces? What are the structural forces that are kind of driving markets here? What are you and the team, if you had to look up at your ceiling in the middle of the night and you're lying awake, what are you most concerned with? What risks pop out to you?
Well, there's something for everybody in this type of an investment climate. And at this time, one has to decide whether they're going to move away from the AI trend or not. And the AI vortex is not only the hyperscalers, but there's a periphery of companies that are benefiting and moving into that vortex and benefiting from the spend that's going on. We'll have $1 trillion spend next year. We have $700 billion this year. And an investor has to really decide, are we going to stay with it, or are we going to change and move away from what is working? Our view is to stick with what is working, not look to be differentiated by going somewhere else. If you look at price earnings to growth ratios, PEG ratios, in fact, these large cap tech companies are trading at lower PEGs than your traditional consumer staples or oils, or so there's good reason to stay with what is working.
Richard, thank you so much for coming. I'd love to see you. Richard Saperstein with us, really the fabric of all this. He's done pretty good in the Barron's. The Barron's does a beauty contest.
Yeah, I know that one.
And there's everybody like striving, and then there's
the late great Jimmy Kane is smiling down on Mr. Saperstein for sure.
Mr. Saperstein shows up to say the least with Treasury Partners this morning.